Welcome. This is MoneyHeart, where we explore the emotional side of money. I'm Camille Diaz, and today we're discussing credit myths busted. My guest is Helen Arroyo. She is marketing director at Professional Negotiators, Inc., and a former banker of nearly 30 years. Helen, welcome to MoneyHeart.
Thank you for having me.
Yeah, so glad that you are here. How did you learn so much about how credit works?
Well, like most people, sometimes we learn by trial by fire. Those kids in college that, get roped into getting credit cards and buying things that they don't need and kind of learn the hard way. But fortunately for me, I was a banker while I was going through in college, and I learned by helping people who had gotten into the same predicaments that I did as a kid. And at some point in my career, became a bank manager and now was accepting loan applications. And unfortunately had to tell several people, I'm sorry, you're not approved. And I had to learn, well, they make good money, how come they didn't get approved? Yeah. Or, what happened here? They were going along just fine and something happened. Mm-hmm. And so you just learn by doing. And I would sit with lenders and underwriters who kind of taught me the ins and outs so that I would be able to speak more intelligently to people and explain, and then try to help them with changing their behaviors and learning how to go about getting approved next time. So unfortunately, we would say no, but it wasn't really a no. It's just not now. How can we help you? How can we help you fix this? And that's the passion that I've led with for all this time.
I love that. And such a great point that you brought up right there at the beginning of getting that first credit card when you go to college and not necessarily having any information on how it works, what you're supposed to do with it, how to make your credit good. And you're really in a vulnerable spot there. I remember showing up to college in that first week. There were vendors all over the place with
I was one of those vendors.
You were one of those vendors?
Shamefully, yes.
Credit cards, bank accounts, cell phones, like all this kind of stuff. Hey, you got to sign up for a thing. And I've talked to people, and we've had some people on the show say, yeah, I got my first credit card. I charged up $2,000 and I didn't even know I had to pay it back.
Absolutely.
I thought it was free money.
Yeah. Yeah, I remember, as I said, I was working in the bank, and I remember classmates of mine coming in, and, they had a credit card with the bank. We were right across the street from the university. And so the kids would be coming in and wondering, why don't I have money in my checking account? I still have checks in my checkbook. And why is I got that.
There's checks in my checkbook. So because that's the way cash works. If you have cash in your wallet or cash in your purse or your pocket, you have money. So if there's checks in my checkbook, I should still have money, right?
Exactly.
Oh, wow.
And I've got this credit card, and, they told me I can spend $2,000. So, why isn't it working? Why is it no longer working?
Yes. Oh my gosh. So really a big education gap there in how credit cards work, how checking accounts work, how this whole sort of financial machine works with money that we have but can't see or touch. It's there, and we've got to keep track of it somehow. Huge stuff to learn.
And big, there is a big financial literacy gap in the U.S. I think most people are similar to our case, where, like you said, where we learned in college, a lot of parents, learned the same way, and, and don't really share their finances with their kids. Right. And it's not really taught a lot in schools. I mean, I learned something in fourth grade, how to write a check or something like that. But
Yes.
I mean, by the time you're out there and you're 18, you don't remember that.
No, you really don't. You really don't. You're so overwhelmed with everything else that's going on. You've got this roommate you've never met, and you're probably living on your own for the first time with people you don't know. And how do I do laundry and where do I get
Yeah.
food? And oh,
Yeah.
by the way, there's classes. So
Right. Other
yeah,
priorities take over,
right, right, exactly. There's a lot going on. So other than needing that education piece to really understand credit and understand how it works, why do we care? Why is this even a big deal? What does credit influence
So
in the rest of our
it
lives?
is a big deal because someone who, well, there are several factors that make up your credit score. Payment history is the biggest of the 5 factors that make up your credit score. So for someone who gets a card and charges it and doesn't pay on time, it can be very damaging to their score, for one. But not understanding what makes up your credit score can impact you because you could potentially be paying higher interest rates on your credit card. They can raise your interest rate. You might get approved for the credit card, but have a ridiculous interest rate because of your payment history. And, if you're in the market for a car or a house, you're locked in for, most people have at least a 5-year
Right,
installment loan
right.
for their car or 30
Yeah.
years for their home.
Yeah.
And
So
to
it's
be
not
locked
even
in,
just thinking about, well, if I buy, a TV, let's say on my credit card, I'm going to pay more for that TV because my interest rate is higher. So rather than paying, an extra 20 or $30 in interest, you might pay an extra 50, 100, $200 in interest because your rate's higher. But really looking
exactly.
at the long term of if you buy a car and your loan is for 6 years, you're going to pay more for 6 years because that loan rate's locked in unless you refinance. And the same thing for a house, 15, 20, 25, 30 years, you're going to be locked into a higher rate because of your credit score 30 years ago. 30 years from now,
Right,
you'll still be paying a higher
right.
interest rate because of your credit score from 30 years ago, which in housing terms, I mean, that translates to tens or even hundreds of thousands of
Thousands of
dollars
dollars.
extra paid because of that rate that you got at the beginning. That's huge.
That's
That's huge.
huge. And
Yeah.
there's a big word, it's a really big word called amortization.
Mm-hmm.
And if you ever look up, they have calculators. And if you
Yes.
ever look up the amortization schedule or calculator for what your loan could have been, your payments and
Right.
interest could have been versus what it is if you have a higher score, you
Mm-hmm.
can really see the difference. So it's super important to pay attention and know your score, maybe shop around ahead of time before you lock in and pay a lot more when maybe sometimes just waiting a couple months or even a year to get a better score would save you thousands over the long
Thousands.
term.
Yeah, because if you're thinking about, over the long term, so let's say you have your house about the same as your working career, you've been working a little bit, you buy a house, you're going to have that house and intend to pay it off right around the time you're going to retire. That is thousands of dollars that you could have used for family vacations. You
Yep.
could have used for your kids to go to school. You could have used to invest in your retirement. Like, this is a lot of money that probably would have made a really big difference during that time that you're paying on your home.
Right. Absolutely.
Wow, that's
You
that's
nailed
huge.
it.
What a great reason to like really be on top of this credit thing. And credit scores, I mean, they look at that for even just renting an apartment.
Yes.
It matters.
Things like renting an apartment, um, believe it or not, auto insurance companies look at your credit score, your credit rating, and they can sometimes charge the same person, same driving experience, but charge a higher premium for people who have lower scores
Yes.
because they consider that a risk and
Right.
therefore
Life
they add a
insurance actually
rating.
does the same thing.
Same.
Your credit score gets folded into your risk classification, and you might end up being charged a higher rate if it pushes you to the next risk class, because of all of the factors that go in. So yeah, it does make a difference in, and not just when you're buying something you're thinking of, like not just when you're charging on your credit card, or not just when you're buying a car.
And I know a lot of employers also look at your credit score. So this could impact your ability to be employed or to get that job that you really, really wanted, especially in a very competitive market. That employer may choose, you might have all of the same great factors, but and characteristics, but they may go with the person with the better credit score if, all things being equal, that was the one thing that tipped the scale.
It could be.
So there's a lot of reasons why credit it's really important to know where you stand.
Yeah, it really is. And it does make a difference. So what makes up the credit score? You said paying on time is the biggest one. What
Yes.
else gets factored in
So,
there?
so when we want to look at your overall credit rating, there are 5 factors. So payment history makes up 35% of your credit score. So that's kind of why in the beginning I said that's probably the most important thing. And then the very next most important thing, believe it or not, are those amounts that you owe on those credit cards. So people have heard the term maxing out their credit.
Mhm.
Have you heard that term?
Sure.
So
That means you
maxing
just
out your
charged up
credit,
everything you had, right? You have a
yes,
$5,000 limit, you charge $5,000.
those college kids that got the $2,000 credit card and charged it all up, they max their credit limit. And what happens is they can affect their credit utilization. 30% of their credit scoring is impacted because most lenders, and when they're looking at credit, want to see the utilization at 30% of the available credit limit or less.
Wow.
So someone who's maxing using 99, 100% is going to have a lower score than someone who's keeping a lower balance on their available credit. So those 2 factors, that's 65% right there.
Right there. It's more than
Right
half
there,
of what's
more than
determining
half.
your score. So they're wanting to see that you have lots of credit, but you don't need to use it all.
I know, silly, right? It's a game. But many people, if you don't know the rules, and how to play
Right.
the game, it can really impact you. And something just as easy as, knowing and keeping in mind, oh, I've got to keep this lower, can really help someone. They might pay on time, but they're using a lot of the available credit.
Yeah.
So the next biggest thing is probably the length of credit history. That's another 15%. So I hate to keep picking on the college kids, but someone just starting out, let's say, someone
Sure.
just starting out and getting credit for the very first time, they don't really have a history, right? There's not much
Right.
to go by there. So they can't look at that payment history. They can't really even look at the amounts that they owe if they never owed anything.
Right. Sure.
So over time, someone's history, is built. But there are ways that you can establish credit history. There's a couple of tricks in the trade. I know my kid, when he went to college, I didn't want him to make the same mistakes that I did. And I actually made him an authorized user on my card. He was going to be going away to school, thousands of miles away from home. And that actually helped his credit because it gave him a credit history that was probably as old as he was.
Right. Sure.
Now,
sure.
I didn't let him use the card unless it was an emergency, but it did give him that history so that once he was able to be out on his own and finished with school, that kind of gave him that little boost, if you will. So that's kind of a little tool of the trade.
That's a great tip to be able to do for your kids. If you have, now, obviously you wouldn't want to do this if you don't have good credit, because let's not
No,
bring them down. But if
right.
you do have good credit and you're able to add them to your card, you are extending your good credit to them to kind of give them a boost at the beginning. How old do they have to be? Do they need to be 18 to have an authorized user on your card?
Yes, I would recommend that they would be 18. A lot of the lenders or banks, bank card issuers may have their own restrictions. So please, make sure that you check with the
Sure.
financial institution. And another thing that I learned just again by trial and error
Right.
is not all of them report that there's an authorized user on your card. So you do want to check first before you add an authorized user that they are going to report it to help that individual. Because yes, they would have access to be able to use that card or inquire about the card. But if it's not really helping them, maybe there's a better card that you can use to do
Can
that
get for
instead.
them. Yeah, yeah. And then obviously you wouldn't want to give a child authorization on a card that's got, a $20,000 limit and they can
Probably
go,
not a good idea.
unless you really know, I mean, everybody knows their kid. Everybody knows if their kid can hang or not with something like that. Um, is it possible for them to get the card and make you an authorized user? Does it add the same benefit if it goes the other way around?
Well, if they can be approved for a card on their own, and what a lot of creditors will do is say, well, if you have a parent or loved one who would want to be a co-signer with you, sometimes they would do that. So in this scenario, the child would be the owner of the card, and they would have a co-signer with them. But keep in mind that that now means that that child's payment history, if there's even one missed payment, is going to go on that co-signer or co-borrower's credit
Right,
as well.
right.
So being an authorized user, you can kind of um, have a little bit more control and kind of accomplish the same thing until you
Mhm.
know that they're ready to really do that.
To be on their own. Yeah. And I love that point because if you, and I just love to share this with people in general, if you co-sign for something, that means you are just as responsible for it as they are. And if they don't pay, or if they bail, or if they max it out, it's all on you, just
Yep.
like if it was your own card. So I love that you brought that up so that people can kind of have that information because they think, oh, I'll co-sign, I'm just helping them out. No, you're not. You're really accepting full responsibility for everything that happens with that card or that account or that loan. And if they don't do it, it's now your loan or card or, purchase of things that clothes that don't fit you and stuff that you don't
Yeah.
want that you now have to
Yes.
pay for if you want it
You
to be
now
on
own
your
that.
right, right. It's like you didn't even get to eat at all those restaurants and now you got to pay for that. So
Yes. Yes.
yeah. Yeah, great point. Okay, anything else that goes into
So I'll
making
just
our
cover
score?
the last two, and they're both 10% of your credit score. So that would be the type of credit. So here we'll talk a little bit about revolving credit, which would be credit cards. That's when you can borrow and you pay it off and you have that limit to use all over again.
Okay.
The other type of credit would be installment type of credit, which we're familiar with like our car payment. It's the
Sure.
same monthly payment for a finite period of time, or like your mortgage, when you make that final payment, the loan is done. If you need to borrow again, you would be starting a whole new loan over again.
Right.
So lenders do look at the types of credit mix, if you will, but it's only 10% of the rating. And then the other final 10% is new credit. So we talked a little bit about the history, but they're also going to be looking at those new cards that are being added on, which
Mhm.
again kind of is proportionate. It will, if you only have one card and you had it for 5 years, and now you get a new loan, um, that's going to decrease your average age of your history. So you'll see a slight dip in your score, but
Mhm.
once you're making those on-time payments again, and you're not maxing out that card, your score is going to bounce right back up again.
Back up. Yeah, yeah, that makes sense. What about when somebody pulls your credit score? So if you're applying for a new card or you're applying for that mortgage loan, or even if you're like renting an apartment, sometimes they'll pull your score, what does that do to your score? What are kind of the limits on how many times you can have that happen before it negatively affects you?
Sure. So those are called inquiries, and there's two different types of credit inquiries. So there are hard inquiries, and usually those are done when applying for a mortgage, an auto loan, as you mentioned, like an apartment lease. And those will take probably 3 to 5 points off of your score with each inquiry. So if you're kind of on that borderline between having really great credit and just very good, or very good and
Sure.
fair,
Yeah.
it could take your score down a couple ticks. If you go to that car dealership and they I don't know if anybody's had this experience. I'm one, again, learned all of this.
Sure.
You come back and you realize that your credit score's gone down about 20 to 25 points and you only bought one car. It's like, wait a minute, what happened here? And so you investigate and you look and you find out you went to one dealership, but they kind of farmed out your credit report to a bunch of lenders who bid for the loan. And the dealership goes with the best deal, of course. But meanwhile, 5 inquiries have occurred for the
Oh
one
my
car that you
gosh.
bought. What I recommend for that, if you're home buying or purchasing a car, is to get in touch with your mortgage lender, mortgage banker, or if you're buying a vehicle, maybe getting in touch with your consumer banker, your branch banker, and getting pre-approved first. This way, you know what you're uh, able to purchase, and it's almost like having a blank check in the hand and saying, hey, I'm approved for $25,000 for my car. Not to say that's all you can buy. If you've got money to put down, you can put that money down and get a more expensive vehicle. But the bank is saying, we're going to give you $25,000. Now you have a little bit of a bargaining tool. And when you get to that dealership, you can tell them, no, no, no. I'm
Don't
already
need you to look at my
pre-approved.
credit. Here's what I have.
You have your one inquiry, and you can start negotiating. Same
Right.
thing with purchasing a home. If you have that relationship or you develop a relationship with a mortgage banker, they can get you a pre-approval. And this way, when you meet with your realtor, you can tell them I'm approved for X amount of dollars, and then they're showing you homes that you can actually afford, and you're not shopping around with
Right.
multiple mortgage lenders
Lenders.
to get the
Yeah.
best deal and lowering your score.
Yeah. I love that concept of, really knowing what you can afford and qualify for before you go in, so that you're not going to end up super disappointed because you fall in love with one house or car or whatever, and then that's not happening.
Right.
Yeah. And it saves you time and it saves you effort. It kind of saves your emotional experience of, not being continually disappointed. Well, I can't get that one. I can't get that one. I can't. You can just narrow right down and go look at the things that are inside of your budget and see, okay, this is where I'm comfortable, and feel really good about that purchase, knowing this one is going to work for me because I've made that assessment up front. Not on the back end when you're all emotional and in love with the pool or whatever.
Absolutely. Yes. So I wanted to kind of segue into soft inquiries then.
Sure.
And a soft inquiry is something like people have heard of, things like Credit Karma, or maybe they even log into one of the 3 credit bureaus, Equifax, TransUnion, and Experian. All 3 of them, you can sign up online and you can actually view your credit reports before you even think about buying the car or the house or getting that credit card or business loan. And this way you kind of have an idea of what's there. And Credit Karma is free. There's several of them out there, Credit Sesame. There's several that you can use. and they actually generate a score. And so it'll give you an idea of what's on your report and basically where your score may lie. Now, each financial institution assigns their own score. This question comes up a lot, a lot.
Okay.
So it may not be the score that that particular financial institution gives you when you apply. But what's important there is to see a trend, hopefully an upward trend of your credit score, and that all of the information on those credit reports is being reported accurately. So if they're reporting that you were late, or if you see inquiries that you did not do,
Right.
you may want to investigate and find out a little bit more about what's happening there.
Yeah.
Um, because unfortunately, we hear cases like that a lot
Yeah.
these days.
It
There's a
happens.
lot of inaccuracies. I actually saw a news article a few months back about 1 in 4 credit reports has at least one inaccurate item on one of the 3 credit bureaus. So yeah, there's data coming from all different places and just the 3 main reporting agencies, and it's not always accurate. So really important to check that,
That's
especially before you're
huge.
shopping and making a major
Yeah.
purchase.
Yeah. So I actually have like in my calendar, I made a recurring event that every year it tells me, go check your credit report. And
Yes,
I just go and I take a little time on a weekend, pull it, review everything. Did I do? Yeah, yeah, yeah. That was me. That was me. Just looking for anything on there. And when I first started doing it, I found stuff on that. I was like, why is that still there? What is this? Like, because I had never looked at it before until I learned to do this. And I saw
yes,
accounts that I'd had, for something that we bought, one of those zero interest for whatever. And I'm like, why do I even still have that? Why is that even still showing up on there? I paid that off 3 years ago. So just, being on top of what's on there really does make a big difference. And my score went up like crazy when I actually started paying attention and handling
yes,
stuff that was on there.
yes.
So yeah, what kind of myths do you commonly hear? You said, the soft inquiries was one that people ask questions about all the time and didn't really understand. What other sort of questions do you get or myths do you hear that people think is the right thing to do? And you're like, oh my gosh, that's the really wrong thing to do. That's not it.
Well, probably the number one thing that I hear is, and we talked about credit, the age of your credit, right?
Mm-hmm.
So the number one myth that I hear people say, and most of the time it's because they are thinking about purchasing a home, is that, oh, I'm going to be purchasing a home. I've closed all of my credit cards. And I just kind of
Oh no.
put my head down and say, okay.
I see immediate. Well, because you told us that having a small percentage of what you have available used is better. So if you closed a bunch of them, you just decreased your available
You just,
percentage.
yes.
Okay.
And you may have lost all of that age, all
The
of that credit
time.
history. So if
Yeah.
you've closed a card down that you've had for 10 years, you've just lost 10 years of history
Wow.
as well. So that can be, impactful, because again, shutting those cards down may have taken away those 2 big score factors that we talked about before.
Mhm.
So, keep your cards open. There was, maybe I'm dating myself, maybe more than 20 years ago, um, the scoring models for the lenders, for mortgage loan officers, was a little different. So that was the case. They
Mm.
would tell you, they would advise you to close your cards. But those practices changed decades ago. So please don't close your cards.
Don't
If you're
follow
going
the
to be,
old advice from 20
yes,
years ago. Set the
yes,
date. Yes. Okay.
exactly,
Okay.
exactly. The other thing, I kind of touched a little bit on it, is I hear, well, I went on Credit Karma and I saw that my score is a 727. Woohoo! Good job. But I went to the bank and the bank told me I was a 689. Aren't all of the scores universal.
Mm.
So that's a big myth. They are not universal. So there are 3 different credit bureaus. Um, they each have their own different proprietary scoring. So the scores may be slightly different for each of those 3. And then, as I shared earlier, the lenders themselves have their own internal scoring models.
Mm-hmm. Mm-hmm.
So I worked at a credit union, and I know that sometimes they will look at things like, well, they've been a member with us for 30 years. They have direct deposit, they have this. So for people who have that type of relationship with us, we give them an extra 10 points on their score.
Right.
And again, that would be proprietary. You would not know when you go to that particular lender what their guidelines are,
Mm-hmm.
but that's why you can see those fluctuations. So again, very important. Check your credit reports, get an idea of where your scores are, and then that will kind of it should average itself out, and you'll have an
Right.
idea.
Right. And that what a great point about having a relationship with a place that's near you, if that's your bank or credit union or something like that, and doing the longevity thing with them so that when you do go in for a loan, if they have guidelines like that that add to your, factor in how long have you been a client and do you have direct deposit or do you regularly put payments in? Do you also have a business account with them? If they look at all of those things, that might help you rather than walking into a random place or just choosing something online, that doesn't have any history with you. You may do better if you've built up a relationship someplace. So
Yes,
I love that as kind of a little side tip,
a little
to
side tip,
yeah,
just something you learn again over the years, and
yes,
very, very helpful. And I recommend people have a relationship with their banker. It's kind of like going to your doctor. You want to make sure they have the full picture and can make the strongest recommendation for you.
right, yeah, I love it. Any other myths that you're normally or regularly hearing that we might want to watch out for? And
Oh, I have another good one here.
okay,
So
love it.
how about this one? Um, so paying off my credit card, that will remove any late or missed payments I had, right?
Oh,
Again, nope, that's not true. So here's the thing. Even if you pay or you close that credit card, that payment history can stay on your credit report for 7 years. So if you were late, or if you missed or you completely missed a payment, that's gonna be on there. Now, obviously, if the account is closed, it's not going to happen again.
sure,
But it's
but it's still there.
you want to prevent that from happening in the first place.
Yeah, yeah.
So it does not go away just because the account is closed. So I do like to make sure that people are aware that that may happen.
Okay. So I'm thinking, knowing that the regularity of the payments is such a big factor in making sure your credit score is good. I would think it would make sense to figure out what your minimum payment is and set up one of those auto payments, through your bank to at least make the minimum on schedule. So even if you forget, oh, I was supposed to pay that yesterday, you know the minimum went in on time and then you can add whatever payment to that you want to add. But at least you're getting the consistency because you've automated it. Does it make sense to do
Absolutely.
that? Yeah.
Absolutely. And it's great. You can go away on vacation knowing that your card payment or your credit card was paid, your mortgage was paid, and you don't have to think about it or worry about it. And you'll never have to worry about late payments. So I highly recommend that. And yeah, that's a great tip.
Yeah. And I love what you just said because you never have to worry about late payments and not only late payments, but late fees. Because
Yes.
then it
Yes.
costs
And
more to pay late.
yes, you don't want to pay late and then have, the late payments added on to the balance that you already have, and it just kind of compounds.
Yeah.
So yeah, don't get into that cycle. A good do in this case would be to set up those automatic payments, at least for the minimum, and then you can make your principal payments at any time.
Right. I love that. Yeah, you can make sure, okay, payday, I make my big principal payment and, at least I know my minimum went in 3 days before, so I got it in
Right.
on time. Yeah.
Right. Or you got
Yeah.
that bonus check, or, you
Right.
know, you could do it that way. And yeah, I always recommend at least getting those payments
Yeah.
scheduled.
And then that's a really smart thing too, because like you said, ideally you're going on vacation, you're having such a great time, you forgot about your credit card because, we're all like working like crazy because I got to get on the plane tomorrow and I still haven't packed, so we
Yes.
might forget. But sometimes you get sick or you get injured or something like that happens. And, you don't get a choice and you don't get to pre-plan that you're going to be away for a week or two.
Right.
So having that automated will also help you not compound a problem that you're already having. Oh, I got into an accident. I'm going to be out for a few days. And then, oh my gosh, I completely forgot to catch up on my bills, at home type of thing. So yeah, I'm so glad that you share that. It's super helpful. I'm now reevaluating. I'm like, I think I want to do that
Yes.
just in case something happens, it'll
Yes,
be covered.
agreed.
So, because I'm a pay
Life
it off.
happens.
Yeah, yeah, I'm a pay it off type of person, but I might not get in there if I got really, or if something happened to one of my kids, and I'm dealing with that. I'm not thinking about the credit cards due, thinking about
Exactly.
problem solving. So yeah, I love this. I'm excited now. I'm changing my, like, this weekend, I'm getting in there, making sure everything's on auto pay for the minimum so that it's never a problem. Yeah. Any other myths that you hear commonly that we need to bust?
So, yeah, I don't know if you've heard this, but people have come to me and said, well, I have these credit cards. I have 10 credit cards, in fact. And I put balance, I charge something on all 10 of them because that's going to improve my credit score. They think that, they have to have a balance on their credit cards to have a good score. And that is another myth.
Okay.
We kind of spoke about the credit card utilization, but you don't necessarily have to have balances. So you could charge on your credit card. Plenty of people put, their regular bills on there because maybe they want to get points. I do
Sure.
that
Love the
sometimes.
points. Love points.
Love the
Yep. All about
points,
it.
right? It's almost free money, but you have
Mhm.
to be very, very careful.
Right.
If you can, like you said, you're a pay it off kind of girl. I am too. I will use those rewards cards, get the points, pay my groceries, pay my light bills, to get discounts or travel miles, whatever the case.
Mhm.
Funky sunglasses,
Yeah. Costumes. I get a lot
the
of costumes.
costumes. So, but when that bill comes in, or maybe even the same day, I'll just transfer the money from my regular checking account and pay that credit card to zero. So when the bill comes in, it's zero, but I've racked up all those points.
Mhm.
Um, and having zero balances on your cards sometimes will give you a higher score than having small little balances that you have to remember to pay on those 10 cards. So you don't want to mess up that either.
Kind of back
Um,
to that risk thing again. If you've got a zero balance, it's less risky than if you've got, 10, 25, $30 balances that you now have to remember all of them.
exactly,
Okay.
exactly. And it's not necessarily going to improve or lower your score. It may not. Um, but why worry about it when you don't have to? You don't have to do that.
So I have a quick question about a card thing. Like, let's say you have a card that you don't really use very often because you want to keep the longevity on it, but you're like, it doesn't have any good points. Why would I charge on
Right.
that one when I could get points on my other one? So do you need to make a purchase on it every so often? Like, will they close the card for you because you didn't use it if you just let it sit there?
That's happened to me, actually. Yes, there are companies that will close an inactive card because there hasn't been any usage on it. I actually had a store card and for a furniture store. So how
Mm,
often are you buying furniture?
sure, not that
Um,
often.
and I didn't realize that they were going to do that, and they did. And my score went down because of
Right.
it,
Because you lost
right?
time. You lost,
Yes, I
yes.
lost that history and I
Yeah.
lost that utilization, and it came as a total surprise. Again, it's in that tiny, tiny fine print in those disclosures that they give you that,
Oh, yeah.
who reads those?
Right. It's
But it's
this
in
thick and
there.
so tiny, and
Yeah,
it's
it's
boring.
in there. And some places will do that. So, for that reason, and it's just my own personal reason, I will not use store cards anymore.
Mhm.
It's just a personal choice because I prefer to use the points,
Right.
and don't want that to happen to me again since I don't necessarily shop at those particular type of stores regularly.
Mhm.
But for people that do want to have that flexibility and maybe do make those types of purchases often from particular stores, maybe you can make a small purchase once a year to keep
Mhm.
that card active to avoid that uh, store or the store's bank from closing that card out on you when
Right.
you least expect it or need it.
Or need it. Yeah, you
Or
wouldn't
need it,
go to the store and like, hey, I'm going to put this on my store card. And they're like, sorry, that card's been canceled. You're like, wait, what?
right?
Yeah.
How did I not know?
Yeah, exactly. So another thing to add to the calendar is like, hey, make a charge on this card, at this time, just so that it comes up every year and reminds you to try. And then don't forget to pay that one, because
Don't forget, right?
if it's not in the regular rotation, it's really easy to forget. Like, oh, I never use that card, but that one time you got to like charge it and then make yourself a new note to pay it the next month so that you remember to do that.
Yes, yes.
Yeah, yeah.
And talking about store cards, so there's one last myth that I have, and um, so a lot of people think that getting a store branded card is different from getting a major credit card like your MasterCard or your
Yep.
your Visa.
Mhm.
And so one of the things that they'll say is, um, well, those store cards, they don't report anyway. So
Oh,
yeah, because they don't necessarily think that it doesn't, a lot of them, if you look at the physical card, unless you know where to look, you might not even know what bank issued that card. But the
mhm.
myth is that it's not the furniture store that's issuing the card. The furniture store uses a financial institution
Right.
that handles the lending and the servicing side of it. So those are reported. So you do have to make sure you're paying those store cards on time as well. And if they're closed, as I shared with my own personal experience, it can reduce your availability.
Right.
So
Yeah.
yeah,
Oh,
that's
that's such a
another
good
big
tip.
one.
I didn't even know people would think that, oh, that one doesn't count. It's a store card. Like, no, 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 it totally counts. Just
Right.
the same as any other. Yeah. This has
Yeah.
been so helpful. Thank you for sharing such great information with us.
Oh, it's been my pleasure. Lots of fun. And I love spreading the word.
Yes, I love
That's
it.
what
I
I'm
love it. Thank
passionate
you.
about.
If you would like to get in contact with Helen, she can be reached via email at helen.pronegotiator@gmail.com or by phone at 954-646-1172. Thank you as well to all of our listeners and viewers. I'm your host, Camille Diaz. I specialize in financial education, life insurance with living benefits, and guaranteed lifetime income. You can contact me and find out what else I'm up to through my website, CamilleDiaz.com, and follow me on social media at Cam Unfiltered. Be sure to follow MoneyHeart at MoneyHeart Show and on our website, MoneyHeartShow.com. Helen has a money mantra for us today, and so I'm going to let her tell you about it and share it.
Sure. So I log on to my computer every morning and I have a quote on there from Professor Tal Ben Sahar. And it says, happiness is the best currency.
I love that. Thank you so much.
It's been my pleasure. Thank you so much.